Are looking live at a daily chart of the Nasdaq, which bounced a little bit today. I did bounce. It bounced more than 1%, 166 points, 1.03%. The volume was 4% above the average 50-day average volume. I just wanted to point out a couple things here with the Nasdaq. First of all, the 16% correction from the July 11th high of 18,671. Yesterday morning, it gapped down and traded down to 15,708. So that's a 16% correction. That's a pretty rare animal, unless the index is going into a bear market, which it, very well could. I'm not saying that it is, I'm not saying that it isn't. Just take things one day at a time. But what I was looking for today was the close on Friday was 16,776, and the low on Monday was 15,708. So what I was looking for is for a 50% retracement of that move from the close on Friday to the low on Monday. And that number was 16,243. And I thought if it could stay above that number, just get half of that back, that's a good sign. It's a sign of it's starting to recover. Today obviously was day one of an attempted rally. We have to wait till day 4, which would be Friday, for a follow-through day. We wait till the 4th day because usually the first 3 days are a lot of short covering involved, and we want to make sure there's institutional support if we're going to jump back into this market real heavy. I think it's wise to just dip your toe in since the Nasdaq is above 16,243. So I bought Spotify today and THC, which is just small positions, probes, just to see if they're working. And so, it's not something that's I'm not going in heavy or anything. I'm not buying 50% of NVDA or anything like that. Just a couple small positions, just see how they're working. Because like I said, this thing could certainly, fall through day. The first day would be a Friday, and this first day today, day one of an attempted rally, could definitely fail as well. The support there at the 200 simple moving average, you would think that would be support and it would stay above that, but you never know. The index went from on this date here, it was 8.9% above its 50 simple moving average, all the way down to yesterday where it was 7.8 below. So that's a very quick move in a very short period of time. So that that causes some concern, right? Because we want to see the market in a power trend and trading higher if we want to get back 100% invested or on margin like that. So this thing has a lot of work to do. I wouldn't be going crazy jumping in, but I also wouldn't be afraid to just start a couple probe positions. And if you get stopped out, you get stopped out. But if you do happen to catch a stock like a Spotify and it starts to rally, then you have a good entry point. All right. So anyway, the Nasdaq day one of an attempted rally here. So we have to wait till Friday for a follow-through day. I've just got to go to the S&P 500, which is pretty similar to the Nasdaq. It's not as close to its 200, but today is day one of an attempted rally, and it got 50% of its retracement as well. IWM, we were seeing the mega cap tech stocks sell off, and then these small caps ripping, and then all of a sudden, these things sold off too, much like the Nasdaq traded down to its 200 bounce today. So you're just gonna have to wait. Once again, day 4 would be Friday, would be the earliest that we could have a follow through day, and then the Dow Jones Industrial Average is pretty similar action here. It didn't make it to its 200, but traded down, and now it's still below its 50 here, 1.1% below the 50. And then the mid cap stocks, which it just helps to have the tailwinds of the index behind you to be successful in trading. And this one did trade down to its 200 and bounce. So it's doing what it's supposed to do by getting that retracement back, but it has to it has to follow through, not a follow through day, but it has to follow through in subsequent days and rally on a Friday 1% or more, with volume higher than the prior day. Anyway, I'm going to get to some stocks today. Apple was weak today. Yesterday was Buffett was selling, and I guess they followed through today. Google lost an antitrust suit with the Department of Justice, which is not good for Google, and Apple's hit because Google, has some of their wares on the, the iPhone. So Apple was down on, that weakness. So Google was actually doing better than Apple with the news. Both down today on this session. And this has a lot of work to do. That's a lot of damage in a short period of time. And this is what really scares retail traders and people who like volatility, people who like to buy bottoms, love this stuff because they can pick up quality stocks at cheaper prices. Google was 191 not long ago. Now you can buy it at 158. Business is the same, so it's the same company. Actually, breaking up Google wouldn't be a bad thing, actually. Same with Amazon. This is Microsoft. Now it's below the 200, now finding resistance at the 200. So that's something to watch there. Also, that 400 Jesse Livermore number for Microsoft. Amazon, man, below the 200. This thing has a lot of work to do too. When you see that gap lower, I mean, the gap is what, 181. It's got a long way to go. 180, 187. So, it's got $20 to rise just to fill that gap there. And then Tesla, it was one of the stronger stocks, and now it's below its 50. One of the stronger Mag 7 stocks, and now it's below its 50. And now it's struggling with the 200 number once again, which it did back here, hit the 198, formed a, stage one base, kind of teeter-tottered around the 200, then gapped higher, and now it's back here again. So kind of frustrating times. The market cannot make any headway here. It's had, vicious sell-off. So a lot of people in cash stopped out and just waiting for, some of these charts to heal and some of the damage to be repaired. This is NVIDIA. It recovered a little bit today, up nearly 4%, still below the 50. And you could see, these lower lows here, and the moving averages, short-term moving averages crossed over the 50. So not a real good look for NVIDIA. Like I say, these charts are damaged and they have a lot of work to do. I could go through a bunch of negative charts and a negative stuff, and I'm not going to, because there's a lot of areas getting hit now. The airlines, cruise lines, hotels, Airbnb, that type of stuff, with the economy slowing, they're getting hit, the restaurants. But I'm not going to do that. I'm going to go to an area where, this is a rate sensitive area, these home builders, but, any stock above the 21 in this tape, this is holding up while the index is selling off. So this is showing you relative strength. The interest rates are coming down. The mortgage rates are coming down. The interest rates, the bond market is telling us the next move, will be lower from the Fed. Just a question of when, not if. Rates will be coming down. So Lennar, the home builders, look pretty darn good to me. KBH had this big move, breakout, right? Pull back to the 50, 3-day sell-off. But today, above that buy area and back above 80. So KBH rebounded nicely. DHI, this is my favorite of the group because it's the largest. But there's other ones in here, but this one just pulled back to its 21 found support. So like I say, any stock above its 21 in this tape, the way the indexes have been slaughtered, that's really showing you some relative strength there. And then Pulte Homes, this one looks actually pretty good. I was going to put this on the right list, but I don't want to put too many stocks on. I think we're in for more turbulent waters, and I don't want people to get hurt. So but this one, is above its moving averages. You could see the 10 starting to curl down here, this green one. So, just be careful here. It does have that 122 buy point, but I'm just going to stay away for now and just see what happens with the market. I have about 12 stocks on that list. So I think that's enough for now. Anyway, the home builders are holding up. I just wanted to show you that. Also, the food stocks. This is the problem with this is that it's kind of like a recession, right? Because in recessions, institutions like to buy these recession-proof stocks because people are going to eat, they're going to buy soap, they're going to shave, and so that's Clorox and Procter and Gamble and Colgate and Unilever is a food stock, obviously doing really well. Pulled back to its 10 EMA and found support. So is that a stock I would want to buy? No. I'm just showing you some relative strength instead of showing you all the negative stuff. Coca-Cola, the beverage, tobacco, this is the type of stuff that's bought. When the market thinks we might be going into recession, I personally don't think we are. There's GDP is pretty strong. Workforce is still pretty strong, but it doesn't matter what I think, it's what the market's doing, and I'm just showing you what the market's doing. That's the reason for this exercise. Pepsi, again, just forming this base here, but above its moving averages. So just showing you here, this is a stage one base here. You can see on the weekly chart forming the stage one base. The earnings line are, kind of nice here for Pepsi, but it's a real slow mover. People buy it for the dividends, and you don't expect a whole lot out of this. Speaking of dividends and cigarettes, is the Altria group, tobacco group, Marlboro, um, above moving averages. I'm just showing you because this is some relative strength here. BTI, another tobacco, pulled back to its 21 and found support. So, and then I did mention Procter and Gamble earlier, looking pretty good. And then Colgate Palmolive, gosh, trending higher. That looks just like a software name, just trending higher, surfing its moving averages. And I'm just showing you this for where the relative strength is. Rocket, this is one that's one of these finance stocks that's really has been a rocket. It's extended now, but if you wanted to take a swing at this one, you'd have to wait till it's closer to its moving average. It's 10.7% above its 10 EMA, and that's getting a little hot. But it's been strong in the week tape while the index has been pulling back. This one's showing strength, as evidenced by this blue line here, just heading straight north. So Rocket is very strong. FIS, another financial name that once again, I was going to put this on a ready list. It's got this double bottom base, but it undercut its 50. So, it's kind of a no-go for me. But now it's rallied back above. So just a stock of interest. I'm not going to put this one back on, but or put it on at all. But I'm just showing you some strength. You can see that RS line driving through, driving higher, 89% RS rating. Pretty strong stock right there. ZETA, they reported earnings last week, gapped higher, pulled back to the 21, found support. Now it's trading above the 10. 5.5% above the 10. That's a strong stock. Not many software names doing all that well. Spotify, this is one that I like. This is one I said that I bought. Why? Because it's near a buy point. Why? Well, it's holding up, during the market correction. It just pulled back to its 50. If the market does have a follow through day and the market does start to heal and does get back in a power trend, I think Spotify is going to be a winner. So just gonna have to wait and see. Another one in the software names is GoDaddy. Yeah, this one made a new high today. This one's real strong stock, 154.80, and just surfing the moving averages here. They already reported earnings last week, 87% earnings growth. So that's very strong. ServiceNow, another one that's near a buy point. I'm not going to entertain this though. I'm just not going to put a lot of stuff on right now. Very cautious. And it did find support at the 50. It's been finding support at the 50. So you just got to, put that into consideration. Also making these, higher lows. So if it continues to make higher lows and those moving averages trend higher, maybe I'll put this one on next week. It's definitely something that, I continue to watch. All right, the energy names, a couple of them reported, and Duke Energy, a lot of strength here, well above its 10 EMA, had an inside day today. Duke Energy looks pretty darn strong. WEC, formerly Wisconsin Energy. This one, yeah, just a beast of a stock. These things are well above their 10 EMA. So any stock above their 10 in this tape, 2.3% above its 10, very strong. And then Constellation reported this morning, growth obviously slowing here. It bounced off its 200, but the 50s curling down, the 10 and the 21 are going to provide resistance here. This does not look like something that I would entertain. VST is another one. They report Thursday, a little stronger than Constellation, but I just can't touch these, the way their current status. So they need to repair their charts. There's just too much damage here, technical damage, to get involved with that kind of stuff. All right, I've got to get to the drugs. I've been talking about TGX for a long, long time because they have the best in show multiple sclerosis drug. And today they reported earnings that were, pretty much blowout earnings, and they showed they're cash flow positive. I want to say they upped guidance to 300 million in revenue, and they had a stock buyback program. They had a 250 million lending credit facility, and 100 millions going towards stock buybacks. Just a lot of positive things here. They're taking market share of newer patients, but with the older patients, they're not converting them as fast. Doctors don't want to switch their patients from the drug that they're on to a new drug. So, but they're getting on the new patients, they're taking market share. I hope that makes sense. So you have to be patient until they get more patients. How about that? But longer term, I mean, if you like to hold something longer term, I mean, this it's got a lot of shorts in it, and you can see how it's been reacting lately, sold off with the index. But this was a heck of a report. You're getting triple digit sales and earnings growth. Look at these margins. 300 million in sales, I just got to say, maybe, with this market cap, the CEO gets a bonus when it gets to 10 billion by October 2026. And I think they're going to do that, but he's got to get over 100, or not 100, they have to get over 1 billion in annual sales, and they're 300 million now. I think they'll do maybe 600 next year, which would be triple digit sales growth. And I think that's pretty conservative. So I'd say by 2026, they're going to reach that. It just depends on how that's 10 times sales, which is not crazy for a stock growing at triple digits, but it's going to be close. It's going to be fun to watch. To me, at $20 right now, or whatever, 20.58, it's fairly valued. It's got a 3 billion market cap with, he said, 300 million in sales. So essentially, 10 times sales right now. But it was a surprise that they were cash flow positive, and they reported earnings. I mean, 4 cents in earnings. They're expected to have a loss of like 13 cents or something. So that was a big surprise. And the shorts got fried today to the tune of about 20%. So congrats to the longs there. That one still looks good to me. Just going to keep watching it. Another one that looks good is ABBV. Just, considering how the markets are, right, just broke out of this cup with handle, just ripped higher on this day, 3.3%, which is a lot for a stock like this. Made that new high of 193 on August 2nd, which is last Friday. And then pulled back Friday, pulled back Monday, and bounced off the 10 today. So just showing you, relative strength here. AbbVie has it. AstraZeneca is one that I like. These are slower moving stocks. These are not NVDA or SMCI or anything like that. But it just pulled, it's trading tight within its base. It's above its 50. So I kind of like that type of action, kind of quiet. The volume's drying up. Yeah, so I kind of like that action. It didn't get killed and slaughtered during the market sell-off. So this thing is not going to hurt you too bad. It's not going to hurt you as bad as some of the other names. How about that? And then Novo Nordisk, they report tomorrow. I got to believe they're going to be embarrassed to report a strong quarter because the administration's going to get after them if they're making too much money. Seriously, though, they're selling everything they make. They're branching out into cardiovascular, but they are heavily dependent on the weight loss diabetes cohort. So we're going to just have to wait and see what they have to say tomorrow. I did hear from the Novo Holdings, and they're going to be very aggressive in acquisitions. He didn't say which area, but I got to believe they're getting in more heavily into cardiovascular. So they have a big war chest of funds. It's a different. Novo Holdings is like a subsidiary of Novo Nordisk. That's where they hoard their cash and they buy stuff. So when these guys make an acquisition, it doesn't come from Novo Nordisk stock, it comes from Novo Holdings. So it's kind of a different kind of a setup there for their business. But anyway, they're going to report tomorrow. I'm looking forward to that. And I think they should, report pretty strong numbers. All right, I got to get to the insurance names. These guys, this is EverQuote. They put on a pretty good report last night. Triple digit, earnings growth, 72% sales growth. Thank you very much. Look at these margins. Diversified insurance. This is, a small cap stock, 930 million. But hey, Wall Street liked it. It pulled back to its 21 EMA and it bounced, made a high of 28 today. So 11% gain, we'll take that. Like I say, any stock above its, moving averages 10 and 21 is very strong in this current market environment, which has been quite turbulent, as you know. SKWD is another one that I have on my list, and this one, big bar today. It looked like it was going places. 41.11 closed at 14% of its daily range, which is not something that we like, but still above the moving averages there. So, looks okay. Looks okay. In this tape, pretty tough tape. Brown and Brown, pull back to its 10, found support, bounced 1%. So that one is just holding up, I guess you could say, showing strength. Pretty similar action here in Gallagher. So those insurance stocks are still looking good, hanging in there. The hospital names, I did buy a little schnitzel, a small position, very small position in THC, like Spotify. So just seeing how they're going to act, try to get it near that 142, try to get it near its 10 EMA. It's only 0.6% above it. So we'll just see how it goes. If it crashes and burns, I'll just sell it. No harm, no foul. No harm done. If it's not a big enough position to hurt me. It's also not a big enough position to really make a big impact. So it's just kind of a probing position to see what areas of the market are going to show some strength. Where are they buying? And this has been a strong group. It's the top 15 group. HCA is its running partner, and I just pulled back to its 21 found support. And this one is just a tick above its 10 EMA as well. And then UHS is another one of these medical hospital stocks, broke out, pulled back to its 10. I mean, come on, you can't ask for anything more than that. Support at the 10. That's fantastic. Looks like today it had an inside day. So Universal Health looks pretty good to me. 14 billion market cap on that one. All right, I got to go to the retail names. I don't want to, but I have to. MELI, this retail internet company from Brazil, was up. God, it was up way more than that today. It was closing range was 40 something percent. Okay. Yeah, it was up to 18.50. Closed. It was $40 off its highs. So it was up $75 today. Still within this base. If you look at the weekly, you can see this big cup with handle, kind of elongated handle, but the earnings line is heading due north. I kind of like that when I'm buying a stock. I like fundamentals and technicals when I buy and then sell on the technicals, because markets stocks top when their fundamentals look the best. Ask Celsius. Speaking of which, Celsius, a retail name that they reported earnings today and people were going all gushing, but they did have 400 million in sales. But you could see this is something that's really important and pretty simple to look at. 100, triple digit sales growth, 95% sales growth. Then all of a sudden they announced 37%. It's like adios muchachos. Yeah, when a growth stock stops growing or slows its growing significantly, that's death. And that's what happened to Celsius this time around. Yeah, 400 million in sales, but it's only 23%. And what's it going to be next time? 10, 12 on Wall Street can find that in like Microsoft. So they're not going to mess around with Celsius. I just wanted to show, I show you this from time to time, a classic growth stock. I showed you this with DocuSign, where they have this, stage one, and then, the stage two is this ascent stage. And then it has a stage three where it just kind of flattens out. Now stage four, which is the decline. So it went from the ascent to the topping to the decline. And it's just going to have to start all over. It'll find its footings at some place. It's not a bad company or anything. It's just, a little overvalued here. It's down to below a 9 billion market cap though. So not bad with maybe 2 billion in sales. So it's just getting a haircut. And that's the way it goes in Wall Street. When you hold growth stocks, they're like time bombs. They are going to go off at some point. You just don't want them going off in your hand. So you got to be careful. Abercrombie and Fitch had this massive run, and it looks to me like it's kind of doing the same thing, right? Had this stage one base, had this stage two, massive run, and now going sideways the last few months. I wouldn't be surprised to see it dive down below 100. Yeah, that wouldn't surprise me at all, and kind of reestablish itself. It did find support at the 200, but so it's for me, it's one to watch because it's still got, the 20% growth. It wasn't triple digit down to 20. It's been around 20 the whole time with solid earnings growth. So, like I say, I like the fundamentals. It's just one that I am watching. So I'm not going to do the shoes today or any more retail. That's enough for me. Thank you for watching. And never give up. Tomorrow I'm on the road. I'm going to post just my stocks, my ready list stocks early in the morning, 4 or 5 names. And then, I'm traveling to Los Angeles, and I'll have a short report tomorrow night. And I'm visiting with some friends and driving up to Silicon Valley and Napa on Thursday. So I'll have a brief report on those days as well. Just, you got to kind of in an area now where we're just going to wait until Friday for a follow through day. I wouldn't plunge in too heavily or go too big on your trades right now until the market proves itself. We always want to allow it to approve itself. So, in honor of the great Steve Jobs, I do have one more thing. I want to show you some earnings tonight that I was watching. This is Super Micro. They reported, I don't know what they reported. They reported something like, wow, they really blew it out on sales and earnings and forward guidance. So I don't know why the stock's down. This is strange. Maybe he said something on the call. This is trading above $700 or something, and now it's down. So I'll have more in the morning on this. Yeah, I believe they raised their guidance, man, to something crazy. Like I want to say 30 billion in sales. So I don't know why this is down. But this will impact those AI stocks. NVIDIA is kind of flat. So just gonna have to wait and see in the morning. This is strange. Because when I looked at it earlier, it was like $700. We'll see what Dell is doing and VRT. So these are down. So that's okay, that's flat. So like I said, I'll have more for you in the morning. SMCI down though, 3%. So he must have said something that spooked somebody. Anyway, Rivian, gosh, they reported, and their big news was instead of losing $38,000 each car they make, they're only losing 32,000. Hard for me to invest in a company losing money like that. But some people, I don't know, like Rivian, I don't know. I just that's an avoid for me. It's just doesn't have enough fundamentals to sustain a move. Airbnb do not like their business model. I think it's in trouble. They reported tonight down 13%. I mentioned earlier that the lodging stocks, the cruise lines, the airlines are starting to slow a little bit with the economy. So those are going to get hit in Airbnb tonight. Like I said, I'll have more in the morning before I leave. I'll put out a report pretty early. Amgen reported their one of their forget the name of their drug. Tesla, yeah, it didn't sell. It was like 50 million short. And they're going to try to talk a big game in the weight loss category, but they're nowhere close to Novo or Lilly. And Viking is the one with the Viking's the one with the compound. They're a long ways away from bringing a drug to market, but they do have superior compound, and this guy will probably get bought out one of these days. WYNN Hotels, they missed both top and bottom lines. Yeah, that's part of it's up 2% after hours, so maybe he said something on the call. Fortinet, very strong report. They beat on the top and bottom line significantly. Yeah, that one's up 15% after hours. So maybe that'll help out with crowd, which needs all the help it can get. Crowd, people say, oh, it formed a bottom. This looks to me just like, last couple of days of shorts covering. You're going to take a profit when you have that much profit. That thing fell a long way. And then Zscaler, okay, it's up a little bit after hours, and Palo Alto Network. So Fortinet, those kind of all trade together like a pack of dogs, and Palo Alto's up 2%, $2 trying to bounce off its 200. And the last one, Giga Cloud Technology, I thought they reported tomorrow. It's up 5% after hours. I wrote that down for some reason. Anyway, that's it for me. Like I said, I'll have more in the morning. Just, be careful out there. You don't have to jump right in right away. Always, always, always allow the markets, always allow the stocks to prove themselves before you jump right back in. You don't want to jump in and have the trap door fall and you're down another 10%. We've had enough of that. So stay safe out there. Make sure the market proves itself. And I'll have a report out early tomorrow morning. And at mcstockcharts.com, we never, ever give up. Thank you for watching.